Excellent. Okay, so we have started the recording. This is the end course live session for the FP&A exam review at UCLA. I've set up a screen share window, and so what I'm going to do is slide various screens into it. This is just my contact information. These are ways to get to me, my email address or through Canvas. The thing is, after the course ends, you may not have continued Canvas access depending on your enrollment at the university, but you can reach me by email. Just give me a sense that that we've connected through UCLA. I also have a LinkedIn profile, and I welcome you to connect with me and join me there. I kind of enjoy learning, afterwards the experience folks have had, and particularly those who've passed. Always great to hear. So feel free to send me a connection request on LinkedIn. All right, and I'm pretty sure I have this information in one of the on one of the introductory slides. It's probably in the welcome module or the first module where you can find this information as well. But you can just find me through LinkedIn. Okay, so that's my contact info. So I'm going to do this session a little bit sort of backwards, but I'm doing that on purpose. What I'm going to do is go through the general sort of end course tips, techniques, tricks, conversation first. And the reason I'll do that is that sort of is likely of interest to everyone. So we'll kind of cover that up front. And then when we're finished with that, then there are additional questions, some materials that I wanted to cover live anyway. But actually, the interesting thing was the list of things that I wanted to cover anyway. Someone requested that I cover them individually anyway, so obviously those are the best materials to present live. Anyway, so let's kind of skip to the end. If we were sort of live, I might do this backwards, or the other way. But let's kind of talk about the exam itself. And get preparing for the exam and all of that. And then we'll go through some specific course materials. And those of you who are in the conference with us, you're welcome to ask additional questions. We have about 2 hours. In fact, I think I actually put a time limit on this one by mistake. So we have 2 hours. Okay, so let's look first at this kind of the resources that are available. And I'm going, whoops, yeah, there we go. I'm going to drag this window into our screen share. And then on my other monitor here, I know we need to go back to our conference. Okay, beautiful. All right, so instructors have a different access. We get at the information a little different than you do, but than the students. But I believe this is what you see when you log into the learning system for FP&A. And it being end of course, you're probably well familiar with the structure, and you've been using this to get to the various online requirements. What I want to point out to you at this point is 2 sections that you may not have kind of delved into, and they're both up here. The first one is the glossary, and the glossary is literally an alphabetical terms listing. It is available online, and so as you're finalizing, you presumably done most of the studying by now. We're ending the semester, but if there are terms that you're unclear about, you can find them here, and that may be of value to you. Then there's also a resource center, and in the resource center, it's kind of odd that they didn't put the glossary in here, but they didn't. In the Resource Center, there are a series of boxes that you can click on. There's actually a live panel, I guess, or a communication panel where you can fire questions at an expert. There's a feedback session. we'll get into some of the other ones next, but let me go first to the flashcards. The FP&A learning system, and I said this in our welcome session, it's designed with a careful attention to the fact that people learn differently, and in general, coming at you with different types of learning elements improves learning. So some people are visual learners, some people need to hear things, some people need to read, and so secondly, there's sort of repetition and variety. So one of the options that's open to you is these flashcards. And I encourage you, for a lot of folks have said to me afterwards that this really helps. If you haven't already done them, you can open these. Let me see what the difference is here. Part one. Okay, it looks like these are two-sided versus these are one-sided. For our purposes, I'll open the one-sided. Okay, apparently, because I've been in here before. I see. So these are not for printing. The ones that I've clicked on, these are online. So these are just useful. You should go through all of these, or at least you can go through all of these. And yeah, I'm watching on the other monitor. It looks like it's drawing about as quickly as I'm clicking it. It's a little bit slow. Anyway, so you get an idea. These are the flashcards that are in there. There's 71 in this particular. Certainly go through these. Go through these. Make sure that'll help you to capture things and improve your capture. Now let me see if I need to go backwards. Yeah, that works. Okay, flashcards. So apparently had I paid attention, it says right here, these were the online ones, and over here are the ones for printing. The printing ones, it may actually download a file here. Okay, so what it's doing is it's dropping down a PDF. And it's designed so you see one side is kind of a title, and the other side is the definition. So these will be useful for you also. Okay, so that's that. So that's flashcards. Let's go back up to resources. And forgive me, it's obvious these are here, and forgive me for taking the time. It's just sometimes students don't realize it. They're so down in the weeds, they don't realize these things are here for you. And you've got these. I believe you've got 1 year of access, so they're here. Okay, additional resources. Okay, here's the test specifications, an acronym list, key ratios. There are online tutorials, take you through the exam. Yeah, that's an important one. I'm not going to play this because I don't think the audio video will work well through the conference. But you do want to come in here and learn about the spreadsheet functionality and the tool. That's a real important part for this. When you get to the task-based simulations, you will find that you need to use a spreadsheet. You're directed to use spreadsheets. Those spreadsheets use a licensed spreadsheet program that is similar to Microsoft Excel, but it is not a Microsoft product. And the functionality in this licensed product is similar or akin to Excel, but there are significant differences. And I strongly encourage you to get comfortable with it, with that tool, before you get to the exam window, because it is different. And those differences, you don't want to be figuring that out on your exam time. So you need to come back in here and play these videos and get comfortable with the tools ahead of time. I found, I took the exam, let's see, about 2 years ago, that the formula, the formulas that are in the supported spreadsheet are very robust. It's practically, I mean, pretty much they've got everything in there, and they're very robust. And even the structure of the formulas is typically very similar to Excel, and it's well defined. You won't have difficulty, I wouldn't think, using the formulas. But the general spreadsheet itself works differently. And you don't want to find out ahead of time. One of the things I found least convenient, most inconvenient, is that I assumed that if I created a formula and then copied that down, that I would then have that formula in each. Hold on just a moment. Hold on just a moment. Okay, sorry, I had some background noise here I had to get rid of. I assumed that if I copied the formula down, I would then have the formula into all this, pasted into all of the cells that I pasted to the formula to, and it doesn't work that way. As I remember, it pastes the value instead of the formula, which basically means you have to insert each formula separately. It wasn't a terrible inconvenience, but getting used to that was. So it's just, you come back here and make sure you play these, okay, and do get comfortable with that tool. Okay, there is an index to the learning system, and there are some specific spreadsheets that will be very useful for you, particularly on the case materials. They give a special note on the one on chapter 14 that they've used a circular reference, which you actually do want to use, but you got to be careful with it. Okay, let's go back to the resource. I don't know if I can just hit back. It seems like, yeah, no, okay, good. All right. Let me just take temperature at this point. Just those of you in the car, I want to make sure the audio is still functioning. Can you hear me okay? Sometimes okay, great, thanks. In past sessions, sometimes in the conferences, it starts lagging and breaking up, but it seems like we're doing fine. And you are still seeing my screen, great. And we are recording, so everything's going just fine. Okay, so that was additional resources. There is some test taking tips. We're going to talk about some of them next. Also related links. These are basically to the FP&A website, the subset of AFP's website. So there, all of your questions, we're going to cover many of them, but your questions are generally will be answered online. Test taking tips. I have my own list. Let's see what they've got here. Okay, so here they've got their suggestions as far as exam timing, test taking tips, exam functionality tutorial. Okay, so yeah, that's actually that's the same link as we saw before, but so go ahead and make sure you do all of those. All right. All right, so that's the Resource Center. There is an ebook here as well. Some people to go ahead and download if you haven't already. I had one participant, one of the live offerings, who strictly didn't use the paper materials. He was a traveler and he only used the ebook materials. Okay, so that's pretty much. Now, the one other thing I want to let's go into the parts. Doesn't matter. We'll go into part 2. Okay, so you hopefully are well familiar with the screen, and you've been in here numerous times. As I recommended in the beginning, I recommend that you hold on to the practice exams until the end. And so, I mean, by now, at this point, you should be able to do a post-test, which will let you compare your work, your knowledge now to how it was before you started the course, and see where you've made progress. It'll also show you where you may still need some work. And I always recommend that students hold off taking these exam 1, these practice exams, until the end, because these are real simulations of what the exam sessions would be like. There's 2 of them in here in part 2, and there's 2 in part 1. And you can use these not only as additional tests on your knowledge, but also to get your timing down. And that's important. We're going to talk about timing next. So, all right, let me pull up, hold on a second. Okay. All right, so let's talk a little bit about timing. We really don't need this. I'll close that. Okay, so there are 2 parts. Some people take them both on the same day. Some people take them on different days. I actually took them all at once and just blew through them for the day. Saves you travel time, saves you the nerves. Basically, you take a day off and you get it done. Can we save the practice exams for completing prior to our exam date, but post the close of this course? Superb question. Okay, so because these practice exams are in the learning system and not in Canvas, you will have access to the learning system for a year. I'm pretty sure that you get 12 months. So the answer is, yeah, you'll be able to get to them. Canvas is the part that after the course is over, after a while, they lock you out, and it's not a lot of time. I think it's a couple weeks. That's why, I mean, we don't do that much in Canvas. Basically, we use it for communication, and we use it for, to sort of set up the module and keep everybody on track. But the guts of this course actually operate out of the learning system. You paid for that, and or at least it was included in your course fee, and you do have access to that for a year. I'm pretty sure it's 12 months. So yes, you will be able to. You'll have continued access to practice exams, but there's only 2 of them for each part. They don't refresh, so that's why I mean, once you take them, going back and taking them again won't be as valuable as taking it the first time. That's why I always recommend people hold those until the end. Okay, so there are 2 parts. They have different timing. Now, the total time that they tell you that they tell you about for each part includes time for you to get comfortable and go through the instructions and all kinds of other things. It's not so the actual testing time for part 1 is 155 minutes. In that 155 minutes, they're going to present you with 125 questions. 110 of those will be multiple choice. 15 of them will be task-based. So there's your 125. Okay. Hold on just a moment because I'm cleaning up my notes here as I speak. I see I made a mistake. Whoops. I was over in the wrong place. Sorry. Okay. So there are 125 in part 1. You have 155 minutes. What does that mean? On average, you're going to spend 1 minute and you get 1 minute and 15 seconds. What I would do is try and target something less than that so that you have time left at the end. So maybe you target 45 seconds, 3/4 of a minute instead of 75 seconds. Right, well, let's see, 1 minute 15 seconds is 75 seconds. So maybe you target 45 or 50. Leave yourself some buffer. Secondly, there are multiple choice and there are task-based, and they actually figure, the task-based take much longer to do, of course. So, the realize that you want to adjust how much time you spend. The task-based take longer. In terms of value, multiple choices are worth 1 point, and task-based are worth 1.5 points. So I guess theoretically, you should use that math to figure out how much time to spend. Whatever you've got 155 minutes, subtract whatever time you want to leave yourself for review and reconsideration, and we'll talk about that in a second. And then take the remaining time and divide it by and divide that such that you leave yourself, 1 unit or 1 point for the multiple choice and 1.5 points for the task-based simulations. That's what they're worth. So that's how you should allocate your time. All right. Now, there's another element that you need to be aware of. There's nothing you can do about it, but I do want to make you aware of it. Of the 125 questions in part 1, 25 of them are experimental. So you're actually only going to get, well, you're going to get scored on all 125, but only 100 of those, and you don't know which 100, will count. The other 25 are experimental. They're basically testing out future questions for future exams, but you don't know which ones they are. So you've got to pretend that everyone counts, and you've got to allocate your time accordingly, even though, in fact, 1/5 of them don't count. When I took the exam myself, they asked instructors for feedback afterwards, and one of my feedback to them was, I said, "Hey guys, as you know, given I've got both the accounting and the finance background, there were a lot of questions on deferred taxes that I just don't feel were reasonable given the coverage of the course or the audience. I mean, these were really heavy accounting questions." And the response I got back was, "Yeah, those were experimental." All right, so just kind of keep that in mind. 1 out of 5 in part 1 are not, won't count against you. You just don't know which ones. All right, let's talk about part 2. Now, so that part 1 is 155 minutes. What's that? 2.5 hours, a little over 2.5 hours. That's the, sorry, that's not the total test window. That's just the time from the point you hit go until the point they're going to close you off. Okay, so the actual testing time. In part 2, you have an actual testing time of 245 minutes. Once again, there are 125 questions. So this time you have a 2-minute average, not a 1 minute and 15-second average. The reason for that is that in the second part, you have 90 multiple choice, but you have 35 task-based simulations. So it is more like 3/4 multiple choice, 1/4 you got a lot of task-based simulations. There are more, over twice as many as you have in part 1. That's why it takes longer and they give you more time. Of the 125 questions, 90 are scored. So they're going to throw out 35 of them. Again, the rest of them are experimental. You don't know which ones, but just kind of keep that in mind. Okay, so that'll give you your sort of your sense of the speed that you need to achieve. I do recommend that you leave yourself some buffer time. This test does not penalize wrong answers. Some tests you get, for example, let's say 1 point for every correct answer and a -1/4 point for every incorrect answer. So they actually discourage guessing, because if you guess wrong, it hurts you. That's not the case in the FP&A exam. You get a point or 1.5 for everything you answer correctly. 1 point for the multiple choices, 1.5 points for the task-based simulations. There's no subtraction for wrong answers. That means that you absolutely, it's in your best interest to answer everything, even if you are not, some of them are not solid answers for you, even if you're unsure of them. So everybody's got their own approach to this. What I generally do is, if I see the answer, if I can figure the answer out and I've got it narrowed down, at least, or maybe the 2 that I'm sure about, I generally will just go with that and not mark it. If I'm less certain than 1 out of 2, I'll normally mark it. And so when you are going through the instructions ahead of there's about 20 minutes for instructions, and go ahead and play that piece, even if you already have studied it offline before you get in there. Play it again. It's just, you get the time. There's nothing you're going to do about it anyway. I mean, it's extra time. It lets you just get comfortable. I found that when I went in, my heart was kind of pounding, but just going through that, by the time you spend the 20 minutes playing with the instruction windows, you'll be a little bit more relaxed. So I recommend you do that anyway, and it's a refresher. Anyway, in there, they will explain to you how you mark a question. And then there is a very easy option to go back to the ones that you've marked so that you can look at them again. The challenge is, if you mark every single one, you're not going to have enough time to go back and reconsider them. So you want to be judicious about which ones you mark, that it's really the ones that you weren't comfortable with. Very often, at least myself, I find that if I'm pretty comfortable, don't go back and second guess yourself. Run with it. If you were pretty comfortable the first time, it's probably the right answer. And looking at it again, just because you marked it, may cause you to move off the right answer. On the other hand, if you really weren't sure the first time, I would mark it and then go back and look at that. And the reason for doing that is that going through the exam, and it happened to me. There were questions on functions, Excel functions, or some accounting terminology, where the first time I looked at it, I wasn't sure of the answer. By the time I got through all of the questions, other questions had refreshed my memory. In one case, they're actually, they had asked you in one of the earlier questions which combination of functions you would use to achieve a certain result. And then later on, there was a problem where they told you to use that function. So marking it gives you the opportunity to go back later when you've had a little more time to relax, you've seen more of the questions, and frankly, maybe just something has triggered, refreshed your mind. So mark a limited number of them, enough that you plan that you can kind of get through those. But at the very end, if you still have unanswered questions and you've got 2 minutes to go, start going through and guessing. Don't leave anything unmarked. That can only hurt you. I'm sorry, unanswered. That can only hurt you. So that's kind of the approach to use. Get the ones that get them good. The ones that you're not sure about, mark them. Then go back through all your marked ones and make a good decision on as many as you can. And then if you find that, you're getting to the end of the window and there's no time left, just start going through and click them off. It can't hurt you. Okay. Let's see. Okay. Some of these notes, these I can't, these are notes from, I also teach the CTP, and some of these notes don't apply. Okay, so then the next question always is, well, what's my pass? How do I know if I passed? And students, participants in the program never like the answer that I have to give. The answer is they're going to give you points, 1 point for each multiple choice you get right, and 1.5 points for each simulation. Then they're going to add those points up, and that gives you what they call a raw score. Here comes the bad news. They then take all those raw scores for everybody who's taken this test, and they compare those to other people who's taken the test. Now, this is an online, and you get an immediate answer. So you will normally get an immediate answer because they generally do it based on, it's actually compared to how people did the last time. However, they always do legally. It is not a final result, and they'll tell you that you will get final answers later. That's just in case there is some abnormality in the test. They do reserve the right until you receive a piece of paper 3 or 4 weeks later, or whatever it is, that it's not final. However, that hasn't happened yet, and my preliminary, you passed, I did pass. That would be extraordinary. It would just be something extraordinary. But they do reserve that. Anyway, so you get a raw score. They then convert that to a scaled score. The scaled score takes all of the outcomes and ranks them between 200 points and 800 points. You need 500 points to pass, but it's a scaled score. So that doesn't convert to a raw score. So I can't tell you need to get so many of these right. You don't have that math because of the scaling. Okay. So those are my those are kind of the specific ones. Now I've got some kind of general and sort of human-oriented tips that I like to cover because they seem obvious, but people don't do it. And just hopefully you kind of get the benefit of my. You guys know you can see I've taken a lot of exams because I've got a lot of credentials. And so these are just general tips I've picked up along the way, and I encourage you, adopt them for yourself, but I encourage you to consider them. One thing is, I always make sure before the day of the exam where I'm going. Just Google it, and if you have a chance, do a drive-by. Why? What if there's construction around it and you can't get in the way you thought, or you thought in your mind you're sure it's some building, and in fact you're wrong. It's another building. You don't want that stress that morning. So take a weekend before. You'll know where what the building address is. Go ahead of time. and make sure you know where it is. So, and make sure you decide where you're going to park, just goofball things like that, so that you don't have that stress. You want this to be as familiar and as comfortable as possible. You got plenty of stress once they start the timer. So you want to eliminate the stress of seeing, learning, making decisions for the first time. That's one. Secondly, there is a sign-in procedure, and it's going to be stuff that seems like crazy. I mean, they're very, very cautious with these exams. So you'll find that you pretty much get stripped down to your raw clothing before you're allowed into the room. They're not going to let you wear your smartwatch. They are not going to let you take in your cell phone. They may, I can't remember if they let you take in jewelry or not, but it's the security on this exam is extreme, as it should be. And so you will need some sort of identification, and you'll get all these instructions ahead of time. Sorry, you're probably hearing banging. Let me see if I can eliminate that. There we go. So you'll get all these instructions ahead of time. Just familiarize yourself, and ideally leave as little as like when I went up there, I think I took my driver's license, but I left my wallet in my car. And maybe that's not the smartest thing to do, but just you're probably going to get some kind of a locker, and you can put stuff in there. But if you're counting on, I'll be able to look at my watch, no, that's not going to happen. And they're not going to let you take in notes or anything like that. I did take in reading glasses, and they inspected my reading glasses, because apparently there were electronic reading glasses now that'll display items, so it's that level of security. You want to go through all of that ahead of time, not with timing risk, so get there early, get to the room early, get upstairs early. Maybe there's going to be a line, and so get there early, leave yourself time. You just want to eliminate stress. Next, after you check in, or actually it depends on the process, it may be before you check in. There's another goofball thing that I recommend. People always kind of laugh when we do this live, in person. I always see people smiling, but I strongly recommend this. Go ahead, even if you don't have to go ahead and make a trip to the restroom before you check in. Why? Because we're humans. You're going to be sitting stressed out, especially if you're taking 2 sessions, but even if you're taking 1, maybe you're going to have breakfast, maybe use coffee to wake up. And halfway through a 3-hour session, nature may call, and you may have to go. If you have to do that, it's like doing a pit stop in a car, in an automobile race. You want to lose as little as time as possible. That means you want to know where you have to go. You also don't want to get in there under the timing and find out that only 1 of 3 paper towel dispensers has paper towels. You want to know that ahead of time, so that you can just make that as quick as possible and get back to your testing. For me personally, I actually that calms me. that little break from the screen calms me down a little bit, but not if I'm trying to figure things out for the first time. So that comfort of kind of knowing, I've done this, I know where it is. It's behind the elevator. Yes, I need a key. That kind of thing. So anyway, just take care of that ahead of time, so that when you have to do it during the time session, it doesn't mess you up. That's about it for those kinds of conversations. They will give you blank paper. They will give you a calculator. It is a basic calculator. You probably won't use it. I'm thinking that I used it just to calculate where I was with elapsed time. I kept doing that to see where I was, what my average time rate was. But other than that, you will have this spreadsheet available on the, for the actual test. Okay, let's see. That's about it. The only other thing I'm reading through my notes, so that's why I'm taking a moment to make sure I've covered everything. One more point. Every one of these multiple choices. So you've got 110 on the first part, 90 on the second part, 200 multiple choices. They're all worth the same 1 point. Treat them that way. Don't get stubborn and spend an extreme amount of time on one question just because that it's your personality not to give up. there's a point at which you've spent too much time on a question. If you have spent that much time, mark it and move on. They're all worth the same number of points, and the other ones may just be easier. You don't want to not get to those because you were stubborn trying to figure one of them out. You will go back and mark them all at the end. Okay, so that's really all that I have there. Let's see, I've got. Okay, this is actually, whoops, this is actually a summary. I'm having trouble dragging it. Hold on just a moment. There we go. So this is a summary of the actual testing time. Remember I said to you the first section is 155 minutes. It's more than that because there's from the moment you walk in, there's a non-disclosure agreement. They have 3 minutes for that. There's a tutorial that's 17 minutes. So altogether, you've got 20 minutes of before the timer starts, before you start the actual exam. Here's your actual exam, 120 and 35. All right, so that's your one. Now, it's not, I don't believe it's broken up like this. At least it was not. So when I went, it was 155 minutes, but it wasn't, this is just how much time they're allocating. Interesting. Oh yeah, 35 minutes. What did we say? How long was the, 1 second. Okay, so here they're saying 35 minutes for 15 task-based simulations. That's a little bit more than 2 minutes per task-based simulation. Here they've got 120 for 110 multiple choice. So that's a little over 1 minute. So you get that kind of 2 to 1 kind of ratio. Although in points, it's 1.5 to 1. So that's how I would allocate my time. Anyway, okay, and then there's a post-test survey. I don't remember this piece, but I'm sure this is after you've finished the exam. So I don't remember this piece. This doesn't count towards the exam. This must be new over the last year or two. Okay, then part 2, same thing. 20 minutes before you start the exam, non-disclosure agreement tutorial. You can skip these. I wouldn't. Just because it calms you down, makes you more comfortable, refreshes you on how to do things. The test module itself, the test software, is very easy to use. You'll see how to mark things. You'll see how to go back. You'll see how to go forward. They will tell you when you are clicking a button that means this test is over. You'll get a confirmation of that. So that won't happen by mistake. You'll have to click twice to end the exam. Task-based simulation. Okay, so now here you've got 130 minutes for 90 multiple choice and 115 minutes for 35 task-based simulations. Okay, so you'll want to do the math. By the way, these other numbers that I was describing to you, you'll find them up here. They're up here. So you can do all the time allocation and math, whatever schedule you want to make for yourself, you can do all that. All of that's here. Where I am, I'm in, let's see, home, about the exam, which is this link here. And then I'm under testing time. So about the exam, testing time. If you haven't already, go through all this. Okay. FPA exam scoring, that was what we talked about as well. Hold on. Okay, so this explains scaled score and all that stuff. Okay, so you'll want to read through all this stuff. Okay, I'm going to close that down. Okay, let's see. So we're at 12 minutes 55. We started, I think, at I'm Eastern time. Sorry, we started at 12:15. So we have spent about 40 minutes on actual, the exam itself. Whoops, hold on just a second, please. Hold on just a second. Bear with me. Okay, sorry. So Yeah, about 40 minutes. That's about all it takes. What I'm not doing is actually playing the videos and whatnot. You can do that on your own. They're all either here in the learning system under the within the learning system under the additional resources, or they're on the FP&A webs. They're on the AFP's FP&A website. But again, find your way. Get into the learning system, click on that additional resources, and drill down. Make sure that you find the tutorial that takes you through. They actually have two components. I think one of them is a PDF, and I think one of them is a live video that take you through the spreadsheet tool. You don't want to be surprised by that. The tool itself, the interface, is very primitive. And the functionality is there, the functions are there, but the tool itself is very primitive. And you need to know, you don't want to be wasting time finding that out. Okay. Um, so that's that. Okay. So let's do this. I've got 12:57. Why don't we take I guess I'll have to leave the recording going because I'm pretty sure I can't make two recordings for the same set for the same conference. I think it may replace the first one. So I'm going to leave the recording going, but I'll let everybody take a 5-minute break for kind of bio break. So if you kind of leave your audio up, we'll start again in a few moments. And then the second section, I am just going to, we're basically done with the section on how to take the test and test taking. The second section, I just want to go through some pieces that I would prefer, that either people have asked me, students have asked me to cover areas, or I just feel that we should give it some time. And we'll spend about a little less than an hour on that. There's 3 areas that I want to take you through. And so this is entirely optional. If you feel like you're in good shape and you want to drop off the conference or drop off the conference recording, you can go ahead and close it down. Otherwise, hang tight and we'll go through those. And again, that's why I did it this way. I figured that even if you felt really comfortable, we should go through the first part together. But these are just additional items that I'll want to cover with you. One is accounting, one is tax terminology, and one is a specific function that folks asked about, that present value of an annuity constantly growing. Those are the 3 that we'll go through. All right, so we'll see you in about 5 minutes. Okay, hopefully everybody's had enough time. For those of you who are in the live conference with me, would you please just both type that you're back so you don't miss anything. I'll wait till you're both personally back. Okay, that's one. Oh, Vanessa, okay. And Ibn, are you here? Hmm. Let me try typing just in case his audio is. Okay, great. He's just typing here. Okay, great. I just want to make sure. Of course, I can't see you, so I just want to make sure you were both here. Guys, this not a problem. Not a problem. This part is completely optional and not required or anything like that. So if this is stuff that you feel comfortable with that you don't want to, you don't have to. That's why I put it to the end. These are things that people have either asked about or that there's three of them. The first one, this one will knock off fairly easy. Then there's a long one, and then there's a third one that's a little complicated. But we'll get to these three. So, first one that people asked about is the difference between these three tax terms: statutory, effective, and marginal. And so I've put this slide up because it's the easiest one to talk to explain the concepts. So there are three types of tax rates that we normally refer to. The first one is the statutory tax rate. And statutory tax rate is basically is the table that you see at right on the screen. In the United States, taxes are calculated in buckets. And that works for both businesses as well as for individuals. So typically what happens is in the first bucket of income, so in this case we're looking at, this was 2013, the first $50,000 in business taxes were taxed at 15%. So that means if you have $20,000 of income and that's all you had, that 20,000 is taxed at 15%. If you have 50,000, it's taxed at 15%. If you have 100,000, the first 50,000 is taxed at 15%. The next 25,000 is taxed at 25%. So you would calculate 50,000 times 15% plus 25,000 times 25%. And then the last, or the final 25,000, getting you to the 100, is taxed at 34%. So those are the statutory rates. And when you multiply them, now what you'll actually notice is that very often there, once you get over a certain level, they actually pare it back. So the highest rate back in 2013 was 39%. Then it actually drops to 34 and 35, and then it moves back up, and then it drops. It's not always a straight line. Although I didn't realize that 34 and 35 is kind of interesting, but that's how it worked. That's how it worked. It says bubble to take back the advantage of lower rates. Okay. So see what's going on there? Basically, that 38 was in there to eliminate the 34, or to offset the 34 and 35 on the lower brackets. That's why they did that. So they basically, if you've made more than 15 million, you're getting more back, closer to a 38% rate. Anyway, so those are the statutory rates. Now, when you take all of your all of the taxes or tax obligation that you calculate by multiplying each bucket by the tax rate, I use bucket, they call them taxable income range. Taxable income range, by the tax rate for that range, you get a total number. If you divide that total number by your total taxable income, you get the effective tax rate. So that's the rate, the average rate on the total bucket. So in our example, if we have, well, I should have done this off to the side. I could show it to you. But if you took 15% times 50,000, let me load up a calculator. Let's see, you should be able to still see that. And if we take 50,000 times 0.15 and add that in, I should have, all right, let me clear, equals, add that in, and then I take 25, this is the second bucket times 0.25 equals 6250, and add that into the memory. And then I'm going to take the third bucket, 25 times 0.34, 8,500, and we'll add that in. We've got a total number of 22,250 divided by 100,000 in taxable income gives us an effective tax rate of 22.25%. All right, that's how you do it. You add up all the taxable income, the tax that comes from applying the tax rates for each income range times the income that you have in that range, come up with the total tax, and divide that by your income before tax. Okay, so that's how that works. The third term that is often used is the marginal tax rate. And the reason we talk about marginal tax rate is that very often when we're looking at taxes, we are concerned with the effect of a marginal or incremental action, a specific action. So if we use the effective tax rate of 22.5 that we just came up with, I think it was 22.25% against the next dollar that we're going to earn, that's not the right rate. The next dollar is going to be taxed at, in our example here, at 39%. So if we're looking at a project that will add another $20,000 in taxable income to our $100,000 in tax that we're already projecting, that's not going to be at an effective rate of 22.25%. It's going to be at 39% according to this table. So with a relevant number to subtract, if we're going to try and calculate what the project will yield after tax, the income the project will yield after tax, would be that, I forgot what I said, was it 20,000? Would be that incremental 20,000 of income before tax less 39% marginal tax rate. Okay, so when you're looking at incremental activity, you consider the marginal rate. Now, in this case, you'd have to be careful because, let's say you're in these buckets and the marginal, the activity under consideration is going to bring you from under 15 million to over 15 million. It's got a huge impact. It's got a huge impact. So those are the three terms, statutory, effective, and marginal. Okay, and that material is in chapter 4 of part 1. We're looking at slide 16. Okay. All right, that's that. This one, I was going to do this last. Let's do this next. Get this one covered next. This was a specific question that somebody asked, and it's a little complicated, but we'll go through it just for that purpose. So in what they're showing us here is a piece of a spreadsheet. What we're trying to do is get the present value of a constantly growing annuity. And so what we're looking here again is a spreadsheet. And okay, so they're showing us two columns, but they're showing us column B twice. The first time over here, they're showing us the result. So what you would see if you looked, at the spreadsheet. Over here, they're showing us the content, the formula that's in there, or the entry that's in there. So you're seeing the same column twice, but this is the sort of the explanation or the underlying formula, and this is the the outcome. So we've got a cell B1 is the payment amount. Cell B2 is the percentage, which is entered as 0.04. 3 is the number of constant growth periods. Cell B4 is the growth rate, again in percentage terms, 0.02. Then we have a termination value. That's what we'll get at the end of the project. And that the termination period is period 4. The way you set up this present value, and again, this is a constantly growing annuity, so it's growing at a specific rate, which in this case is 2%, is to value two pieces and put them together. So in cell B8, we model the growth period and its present value, and that formula is here. So if you key in that formula into a spreadsheet, you will get an outcome of $2,829.50 using these inputs. And then separately, you calculate the present value of the termination. The termination is B5. B5, the termination value. So it's the present value of B2. By the way, these the terminology for an Excel function is that you start with an equal sign, which tells Excel that what's coming is some sort of a formula. Then if you're going to use a function, there's the function name. In this case, we're doing present value, which is the function name is PV. Then there are one or more arguments separated by commas contained within parentheses. So each one of these things like B2, B6, 0, and negative B5, those are I was just looking to see, yes, you can actually see my mouse. I didn't know if you could see my mouse, you can. So those are called arguments. And the function expects not only the right number of arguments, but they have to be in the right order. Okay, so you always want to be careful of that. Okay, so present value of B2, which is the interest rate. B6, which is the number of periods from now that will terminate. The 0 probably is setting it to end of period value, not beginning of period value. So that's probably just an identified an argument that's required for the function to operate. And then minus B5 means we're getting the money back, basically, that's in cell B5. Okay. And when you punch that in, you'll get a termination value of $2,564.41. What does that mean? It means if we're going to get $3,000 in 4 periods, the value of that right now, assuming a 4% interest rate, is $2,564.41. So if you add the growth that we're going to get and the termination value, you get your PV total in cell B10. And you see that the underlying argument there just says add B8 and B9. Okay, so that's how you do the present value of an annuity constantly growing. Someone wrote that this was a challenge, and so I just wanted to make sure we covered it. Okay, so that's what's going on there. Okay, so both of those are fairly quick. In fact, we covered them in 3 or 4 minutes. No, in 10 minutes. This last topic will take longer. Most of the rest of our time. Okay, and we are looking again at chapter 7 in part 1. Let's see, right now we're on slide 39, but I'll take you back to the beginning of this. This one is this session was on chapter 7 and chapter 8. And where I want to focus is chapter 7. The reason I want to do this is as follows. The audience for this certification, by and large, includes people who are in financial planning and analysis or have some sort of a budgeting or forecasting responsibility or interest. Sometimes those people have come up through the accounting world. Very often they have not. My own personal career, I did not. I went into FP&A and was in FP&A for years. Let's see, 81 to 93, really, 94, 93. Actually, I started in 92, I think. But anyway, so for a better part of a decade, I was a financial analyst, senior financial analyst, vice president of finance, but had not yet done formalized study in accounting other than a couple of intro courses in my that I did my MBA. I have an MBA in finance. I didn't add the accounting side until much, much later, and it's not unusual for that to be the case. The challenge that you have in FP&A and is that where it is its own discipline, financial planning and analysis, the language still uses accounting. The language is accounting. And so if you are in this part of the career world and don't feel strongly about your accounting skills, it's something I encourage you to add over time, and you can add it academically. You can do it by self-study. You can study for certifications. You can work with accountants at your company. All kinds of ways you can get at it, but you have to have some level of accounting expertise to be an effective financial analyst. And I think that the level of coverage that they put into this program is reasonable considering the total size of the program. This is designed to be between 110 and 120 hour program in terms of the amount of time you're expected to put in. So the amount of time that they spend on accounting is reasonable, but there's a lot of material there. I'm sure familiar with the CPA exam, which is a much larger program. You're looking at 400 hours. Then there's a CMA, Certified Management Accountant, which is probably the next most popular certification in accounting, and that runs a couple hundred hours of study. These are this certification is wider, but not quite as deep on the accounting. So try to be comfortable with this chapter. Go through it again if you need to. Those of you who are actually with us live, it depends on your background. I usually start, I ask people when we start the course, to give me a sense of who has an accounting background and who doesn't, so I know how much time to spend on this. So there are accounting concepts and standards. There are accounting and external financial reporting, income statement, balance sheet, statement of cash flows, and the interactions. Where I want to spend time is, I'm going to kind of go through all of this, but I want to make sure that we cover the interactions. That's real important, but we'll cover all of these. Okay, so there are accounting concepts. I'm not going to go through them again. We went through them you can go back to the slide, but you know what these are. If you're unfamiliar with any of them, you certainly, you need to know these. These are the building blocks. Okay, then we talk about IFRS and GAAP. There isn't a lot of coverage on the difference. It pretty much, the exam kind of assumes GAAP. It's all pretty much on US accounting, but understand that there are only two major countries in the world that are using GAAP, but we're one of them. Okay, and these are some of the differences. We don't have to spend a lot of time on. Okay, this is important. Most larger firms use accrual basis. That's the normal sort of accounting. Smaller firms, my clients in my company, in my our practice, very often use cash basis. And there's a modified cash basis that certain companies, especially professional service companies, tend to use. This is kind of a hybrid, this one, modified. Basically, the revenue part of the income statement is done on an accrual basis as earned, and the expense part is done on a cash basis as paid. And so you don't see it a lot. It's mainly for accounting firms and for law firms and professional service businesses. Usually it's either accrual or cash. The difference is that cash basis, in a nutshell, is accounted for, transactions are accounted for when the cash changes hands. Whereas accrual basis, they're accounted for when earnings or the incurrence of expense happens. Okay, and go through the accounting cycle. I'm not going to go through these. Okay, so this is slide on whether an increase, whether a debit increases or decreases, just understanding debits and credits. Rules, applying the matching principle, more of the accounting cycle. Okay, so this I'll go through quickly. Again, you've gone through it hopefully, but there are deviations. Different industries have different income statement formats. But generally speaking, there is a revenue section. And from that revenue section, there is a reduction by costs that are specifically related to producing those revenues. It could be the costs of the inventories that have been sold. It could be the cost of providing services. But so generally you have some sort of a revenue minus a cost of goods sold to get to a gross margin. One industry that I've dealt with that doesn't have that format is property management. It is strictly revenues minus costs. And they don't minus period costs, which we're talking about next. So they don't have a cost of goods sold. It's not material. So there are deviations in different industries. Okay, then after product costs and a gross margin, we have period costs. And I don't like the use of the word there, non-operating expenses, because that's not correct. That's a slide typo there. Most of these are operating until you get down. Anyway, okay. So because I'm going to, I don't want to spend too much time on this. So you have an operating expense section, then very often a non-operating expense section, then extraordinary items to get to net income. One more comment, the use of the word period. Period costs are costs that march along based on the calendar, not based on how much product we move, typically. Okay, so in GAAP recognition, the product costs are usually the costs of either the products, inventory, or the services directly to provide those goods or services. But these are more things like rent and selling and general administrative things that are pretty much going to be the same. I mean, they can be variable, but they're not directly tied to the revenues. Okay, so there's an income statement: revenue, cost of goods sold, gross profit, SG&A, EBITDA, depreciation and amortization, EBIT. So EBITDA is earning before interest, taxes, depreciation, and amortization. So then when you take away depreciation and amortization, you get to just EBIT, earnings before interest and taxes. Then you take away interest expense to get into income before tax, take away tax expense to get to net income. Many of the folks taking the class this round are younger than myself. In the older days, when I first started my career, we didn't use the term EBITDA. EBITDA is something that came in the, well, at first I think it started in the late 90s, but it didn't come into strong use until the early 2000s, the first decade. And it, by and large, was a product of the private equity segment. They started, the deals were conditioned on EBITDA, and basically values on EBITDA and funding on EBITDA. The reason being is that it's an interesting line. It is over the long term, it's a proxy or a representation of cash flow. It is not cash flow. And there's articles out there already about articles about the differences between cash flow and EBITDA. It's not cash flow, but over the long term, over a 1-year income statement, it's a pretty good proxy, and that's why it's used. Why is it not cash flow? Well, because in cost of goods sold, we're including the cost of inventory that we've sold during the period. We may have paid for that inventory 3 years ago, which means that the cash that went out for that cost of goods sold didn't hit this period. It was a long time ago. So the cash flow for the period has nothing to do with the cost of goods sold that's there. But since most businesses move their costs, their inventory, 3 or 4 times a year, if you're looking at a full year, EBITDA is a decent approximation of cash flow, and that's why it's used. Okay, we went through this, depreciation and amortization. These are expenses, costs that are not typically paid for in cash, or at least what I should say is that the cash payment significantly exceeds the recognition of them. So in both cases, depreciation and amortization, you've paid for something in advance. Depreciation, maybe you've paid for a truck or a robot or a building. And so the cash went out a long time ago. But each year you recognize a portion of the cost. And that's done to match the utilization of that asset over time to the revenues it produces. But from a cash flow perspective, it doesn't affect cash flow. The cash went a long time ago. So that's why those things are excluded from EBITDA. Okay. I'm skipping these because they're either well covered or they're not usually areas that give people problems. Okay, let's go to the balance sheet. All right, so balance sheet is a balance sheet is a snapshot. It is a report of where an organization stood financially at a point in time. Compare that to an income statement. An income statement is more like a report of a flow or a period of time. So over the year, we generated this much revenue, this much expense, and this much net income. You have to know what period of time you're looking at in order to understand the income statement. So if somebody shows you an income statement and it doesn't have a period on identified on it, you have no idea, well, is that for a month, a quarter, a year? You need to know that. The balance sheet is instead at a point in time. Usually it's at on the very last day of, well, sometimes it can be in the opening, but usually it's at the very end of the period. So it's a snapshot of here's where we stood on the last day of the month, or the last day of the quarter, or the last day of the year. The balance sheet is broken into two pieces, and those, well, really three pieces, but there's an upper section and a lower section, and the upper section equals the lower section. And that's why it's called a balance sheet. It has to balance. That's due to the Italian in the 1600s, Pavioli, I think was his name, something like that, who designed a dual entry system. So this has to balance. So the upper section has your assets. And the assets are presented in the order of decreasing liquidity. So most liquid is your cash. That's at the top. Then come other current assets. Current means that they are assets that are expected to be used or converted to cash, or basically, or to provide benefit within one operating cycle. For most businesses, that's 1 year. There are some businesses that have operating cycles that are longer than 1 year. One of them being vineyards. Some of the vineyards use 7-year or 20-year cycles because that's how long it takes for them to get the product to market. But most businesses use a 1-year cycle. And in part because that's the normal tax cycle as well. Anyway, so current means that it is expected to be used in or converted or provide its benefits within the current cycle. Then you have long-term assets, the fixed and financial assets that will provide benefit over time, but likely, but not necessarily in the current operating period. Okay, so I mentioned two sections. The top section is assets. The second section is two components, liabilities and equity. Liabilities are things you owe, basically. And there again, they're presented in the order of decreasing liquidity. So current liabilities, things that we owe within the current year that are presented first. And long-term liabilities are presented after that to a total of total liabilities. Then the next section is called shareholder equity or equity. Now, again, in the case of certain industries, that's not the name. I have several nonprofit clients. Nonprofits use net assets. They don't even have an equity section. There's no such thing. So they have net assets. Then there's a legal form that exists in many states called a limited liability company, LLC. And they don't actually have equity. They have their shareholders are called members, and what the members have is interest, kind of like a partnership interest. And so this section would be members' interest, not shareholder equity. But for a big corporation, generally it's called equity. Okay, so then they go through the balance sheet. Oops, the one piece to point out here. In this spreadsheet, what we're looking at is a spreadsheet. On line 43, which is the very, very bottom, you see a balance check. That's always a strongly recommended practice. Someplace in your model, make sure you have lines that check to make sure that things are in balance. Basically, that your row 41 equals your row 20. Here I got 25,740. And here I've got 25,740, so they're okay. You can hide these or whatever, but you certainly do want to have them. If they don't equal, something's wrong. Something's wrong in your model. So it's important to have that checkpoint. Okay, difference between debt and liabilities. Debt is a liability, but not all liabilities are debt. Shareholder equity. There are pieces of shareholder equity. Common stock, or I should say, let's put it differently. The monies that have been paid in by shareholders in exchange for their ownership of the company are typically broken into two lines, or at least two lines. The first is common stock, and the second is additional paid-in capital. And actually, the only difference between those two is that the common stock line represents how many shares are outstanding, multiplied by the par value of those shares. That is of legal consequence in some states, but other than that, it has no bearing to the FP&A world. What you're really concerned about is 36 plus 37. Okay, the reason those say 68 is because they have 1 million shares outstanding with a par value of 6.8 cents, something along those lines. Or I'm sorry, 68 cents, whatever. And then the rest of what they paid in for those shares to the company, not on the initial exchange, or subsequent purchases from the company, not on secondary markets, goes on the second line. So you're really only concerned about those two together usually. That first line 36 will that number will only change when additional shares are issued. Not issued, or outstanding, sold by the company. And then retained earnings. Retained earnings is extremely important. That's the portion of the shareholder equity section that results from income or loss in operations, less anything that's already been paid out in dividends. Okay, so those are the major pieces. Okay, statement of cash flows. This is the third of the primary schedules, the financial schedules that are required under GAAP, General Accepted Accounting Principles. Statement of cash flows. Statement of cash flows is also a period type statement. It tells you what happened over a period of time, not just where you stand at the end of time. So in that regard, it's more like an income statement than a balance sheet, except it's not measuring income, although it does start with income. It's measuring the flow of cash over the time period. Okay, income and the elements that affect cash are basically pretty much almost all transactions that are on the income statement, all but one, are on the income statement. So this does use most of the income statement. Actually, it uses all of the income statement, but there's one other line that affects the cash flows that isn't on the income statement. Then but this also reconciles cash that can happen from other activities besides operating activities. So if we started the year with $1 million in inventory and we end the year with $500,000 in inventory, that also has a cash effect. So in the end, what we're going to look at next is, and roughly over the next 20 minutes or so, is how the statement of cash flows acts to tie together the income statement and the balance sheet. All right. So first, let's go through the pieces of the cash flow statement, and then we'll look at how it ties them together. There are two. Wait, let me see. Did I skip a slide? Okay. So we'll go back to that slide, but this is what I actually want to show you. There are two methods for producing a statement of cash flows. GAAP is to use the indirect method, or at least it's the more commonly used. There is another type which is direct. What we're going to talk about next is we're going to review the indirect method. Again, that's the more common. It's the one that's used typically for GAAP. Indirect starts with net income and then adjusts it basically to get to, for changes in the balance sheet and other kinds of changes to get to the cash produced or used during the period. That's called indirect because we start with net income. Direct works differently. It actually you start by listing all of the major transactions and you drive to the same numbers, but you drive to them directly. So you would list sales and you would list expenses and you would list, all of the components of the income statement to get to a direct method. To get to this, you get to the same numbers, but it's not generally used. It is actually much easier to put together the indirect method than the direct method because indirect, you just use the other financial statements. So the balance sheet and the income statement. So it's much easier to put together. All right, let me go back up because that other slide had a better picture. There we go. Okay, so how does it work? Well, we start with the primary producer of, three sections: operating, investing, and financing. In the operating section are cash that is generated or used, net cash flow from operations, from operating the business. The second section is investing activities. Investing activities is cash that flows or is used by investing by the business. And the last section is financing activities, cash that is sourced from or used to reduce financing of the organization. And I'm going to go through those two pieces in just a moment. Let me just finish, and then I'll go back and talk a little more about those. And then some kind of a summary or reconcilement. Usually it's just 3 lines. And what that summary is typically, okay, here's the cash from operating, here's the cash from investing, here's the cash from financing, to give you a net cash flow for the period. And that period is always the same as the income statement. Usually it's a year, but it could be a month or a quarter, but usually it's a year. So you get the cash that's been generated. And then there's a little reconcilement. Okay, well, what was beginning cash per the balance sheet at the start of the period? Then if I know my net cash flow, which I've determined from up here, I should be able to add those two to get my ending cash. And that needs to tie to the number that is on the balance sheet, the ending cash. All right, so there's a little reconcilement that goes on here. Forgive me for kind of jumping around, but let me go down. Whoops. Never mind. I was schedule. Okay, here's the summary. It's not very large. Let me see if I can make it a little larger. Whoops. I'm sorry. What's happened? Oh, I jumped. Oh, yeah. Where have I gone? Here we go. Okay. What happened was I used the cursor and I jumped slides instead of within the slide. So this is the summary section I'm talking about. And it's got beginning cash and ending cash. And what's missing on this depiction, I usually strike a net cash flow line from the 3 sections. The cash flow from operating, cash flow from investing, cash flow from financing. I usually add those 3 together to get a net cash flow line. Then I add that to the beginning cash to get the ending cash. Now here they've showed a couple more lines that might be used in a treasury type situation, which is what's the minimum cash that I need to have on, and how much do I have in excess? That is useful in a model. It would be useful in a lot of places, but it's not required by GAAP. This line 37 and 38 would not be on a set of public, on a public cash flow statement. It's more of a modeling thing. Okay, all right, so let me go back up. Okay, let's put this back to, okay, so we start with net income, and then we grab non-cash adjustments and use that to adjust net income. Okay, what are we talking about? Well, we looked before at the income statement, and there were two, for certain types of businesses, there are two adjustments that are very large that are in net income but don't affect cash: depreciation and amortization. If you are a, let's say a retailer. No, well, that's not such a great area. Let me do a service firm. You're a hairdresser, a hair salon. Your depreciation is probably pretty minor. I mean, it's not a big deal. But if you are a manufacturer, you likely have a building, and you have trucks, and you have equipment, and so depreciation is a very large hit, but it doesn't affect cash. You've already paid for that. So if you're starting in an indirect method with net income, the first thing you have to do is add back those costs that were deducted from net income. So they reduced net income, but no cash went out for them. So you add them back here because they don't affect cash. So you add back depreciation and amortization. Those being the primary, the lines on the income statement that don't affect cash. Then you have cash that's contributed because your balance sheet changed. Your inventory went down, your payables went down or up. Okay, so this change in your working capital. And this section, by the way, is another piece that one of the students wrote in a lot of more explanation on. So this is where the changes in working capital hit the cash flow statement. All right, so let's say you had net income. Okay, fine. But the change in inventory also generates cash. So you have to account for that here. Because basically, these are the items that may have been paid in a different period. They're sitting on the balance sheet. And at the point where they change, where they either move off or move on to the balance sheet, they're using or generating cash. So assets, when they go up, use cash. Liabilities, boy, I hope, wait, did I get that right? Assets, an increase in assets uses cash. That's correct. A decrease in assets generates cash. The best example to think of to keep that in your mind, and I'm trying to give you little tips to kind of remember this because they will test this kind of stuff, is accounts receivable. If somebody owes me $1 million and at the end of the period, now I'm only owed $500,000, that means that somebody paid me $500,000. So it's generated cash. All right, keep that in your mind. Okay, so receivable is an asset. If that goes down, it generates cash. Somebody paid me. I've converted a receivable to cash, so I've got more cash. All right, so and so that's basically assets. When they go down, generate cash. When they go up, they use cash. Let's look at the other side. Accounts payable. Accounts payable, that's a current liability, short-term liability. That's the money that I owe to people. If that number goes down, it means that I've paid debts that I owe, typically accounts payable, short trade debts. I bought something on credit and I've paid it off. So liabilities, when they go down, use cash, right? In order for that obligation to be reduced, I've got to pay out money. Keep that in your mind and you won't have a problem remembering this stuff. All right. Assets going down creates money. Think of accounts receivable being liquidated because people pay you, so you got money. Accounts payable going down uses money because I got to pay the bills. Okay. Keep that straight. Okay, the next section is investing, and the last section is financing. I want to contrast them first because this is another area where people get hung up, and I want to try to give you a framework for keeping them straight, because if you don't, you'll mess up. All right. So the big where people get messed up on these sections is, well, if somebody buys stock in my company, they've invested in me. Therefore, that's an investing activity. That's not how it works. The statement of cash flow, think of these two names as from the perspective of the company, not from its stakeholders. Okay. So when we talk about an investing activity, it is an investing activity of the business, not shareholders or lenders into the business. Activities of shareholders or lenders into the business, those are to the company financing activities. Okay, so if you keep those straight, you won't have problems with this. Investing refers to the business investing, not people investing in the business. Financing is people investing in the business. From the company's perspective, we call that financing. Right? Okay, so what are the major pieces in here? You have capital expenditures, looking at investing activities, capital expenditures, short-term investments of the company. In other words, the company making investments will give you a net cash flow from investing. And one of the, well, it'll confuse people, but we've had interesting arguments about, well, doesn't depreciation really belong down here then if it has to do with but it is put up here because you're starting with net income, and the first concept is to reset net income to get rid of these big non-cash items. Anyway, so investing is basically your fixed assets, your short-term investments, your use of your purchase of acquisition or sale of investments. And then financing is dividends paid and long-term debt. Also, yeah, this includes the current portion of long-term debt, which is kind of that also messes people up. On the balance sheet, there is a portion of long-term debt that goes into the current liability section, but on the cash flows and it's the portion that is due to be paid back during the operating cycle. So if you have a 5-year loan of $1 million, but you have to pay back 1 million of that each year, that $5 million will sit on the balance sheet. 1 million in current portion of long-term debt and 4 million as long-term debt. On the statement of cash flows, change in those lines, both of them go into financing activities. Okay. And then again, you have your beginning reconcilement, which I do as the sum of net cash flow from these sections added to your beginning cash to get ending cash. Okay. Okay, we've talked about this, decreases and increases. Have this straight. Always remember to think of, if you think of receivables and payables, and of course know that receivables are assets and payables are liabilities, you'll be able to keep it straight. But work that through until you're really comfortable with it. Okay, we talked about indirect method. Okay, so at this point, we're going to start to describe, I think it runs for about 3 or 4 more slides. We're going to describe how these statements are linked, because we'll find that that the income statement and the balance sheet are all linked to the cash flow statement. So right now, we're just going to kind of annotate or start to show you lines on the income statement and give them a letter so that we can trace them to the cash flow statement at the end. So on the income statement, we have net income, and we're going to call that A. That's the very bottom, right? And then we have B, which is depreciation and amortization. Okay, that got us from EBITDA to EBIT. Interest expense is left because interest expense and income tax expense, because both of them are paid in cash. Now, they may not actually be paid equal in amounts equal to what shows on the income statement, because a lot of times actual tax bills are paid in arrears, and there's all kinds of reasons why they don't equal. But to the extent they don't equal, that'll change the balance sheet. So we catch that difference there. But they are at least they affect cash, whereas this depreciation and amortization doesn't affect cash at all. At least, no, it doesn't, period. Okay, so that's all right. So we picked up those lines: A, net income, bottom, and B, depreciation and amortization. That this B is going to be our adjustment to net income. Okay, now we've moved to the balance sheet. And there's too many here for you to remember, but I just want to show them to you, and then we'll when we get to the cash flow statement, I'll explain them in better detail. Okay, so C is our change in working capital assets. What is working capital? Basically, working capital are our current assets and liabilities. Current assets and current liabilities. Okay, so C is these three lines: accounts receivable, inventory, and other current assets. D is accounts payable and accrued expenses and income taxes. Remember I said that these items are not necessarily paid in cash at the same speed or rate that they hit the income statement, but the extent that they're different, they'll affect the balance sheet. So that they get picked up here. That difference in cash gets picked up here. And notice that they've skipped over current portion of long-term debt because, as we talked about, that is labeled G. That's going down into the investing section. Investing or financing? Financing. Okay. Okay, so that was D. Then we get E, which is the change in fixed assets, and that includes right there the gross PP&E. F, change in other non-current assets. Now G we talked about. H is our long-term debt, and I is our retained earnings. And I'm not sure why they're bringing an A again here. That's net income. Okay, and then that last we're going to up here. J is beginning cash. Note that that's the same as your ending cash for the prior period, and ending cash, which is K in the period that we're looking at. Okay, because we're going to reconcile at the bottom between this 3515. Remember these numbers: 3515 and 6007. Okay, so you can come back in here. We're in chapter 7. In the first part, so you can come back in here to look at this again. Okay, what's going on? Why didn't I get my? Okay, now I'm on. I didn't look closely. Now I'm on my statement of cash flows, and they're showing us the same legend and the same letters, but where they hit. So A was our 2910 was our net income. B was our adjustment for non-cash items, depreciation and amortization. We're adding back. And then C was our decrease or increase in current assets. So see how it decreases. Remember we said when an asset goes down, it decreases. When an asset goes down, it generates cash. Receivable going down generates cash. Okay, and then so here they are negative because they're increasing, which means they're using cash. That's why they're negative numbers. And then you got the flip side for the working capital or the current liabilities. Here they're positive, which means that they are generating cash. So that means they're increasing. If our accounts payable is going up, it means we're not paying bills as fast. So we're retaining cash. So that's generating cash. Okay. And then that last line, increase income taxes, other basically, other working capital. That gives us our net cash from operating activities. Then see that we're I'm getting a little nervous that I believe by mistake I said a 2-hour time frame, so I'm going to rush through this a little bit because I'm afraid the recording and or conference may end. Okay, so then we have our cash flow from investing activities. Again, this is the company's investments. So CapEx spend is what they've spent on fixed assets. And then this is the change of non-current and deferred, which are other long-term assets and liabilities. And then this last section is the increase, decrease in long-term debt plus the current portion of the debt, which in this case is positive, which means they must have taken a loan and they borrowed money, and they paid dividends. The dividends that they paid is a use of cash. Just as a trivia question, they probably won't ask this, but as a trivia question, the only line on the cash flow statement that is not on one of those two statements is dividends paid. It is on indirectly because it affects retained earnings on the balance sheet, but it is not a directly stated number on either statement. Okay, that gives you a net cash from financing. So if you add your, let's see over here on line 20, your net cash flow from operating, line 27, your net cash flow, in this case is an outflow from investing, and line 32, your net cash flow from financing, which in this case includes taking a loan, you will get a total net cash flow for the year of 2013. We had a beginning cash. Remember I mentioned to look at those numbers on the balance sheet. We had a beginning cash of 3,515. We've got our cash flow for the year, and that gets us to an ending cash of 6,807. So it ties to the balance sheet. Okay, that's how we talk about the cash flow statement linking between the income statement and the balance sheet. It covers all of the lines, including dividend activity. All right, and that's that. Okay, so timing worked out pretty darn well. That's just about what I intended to cover. And I think I will, let's see. I think I'll go ahead and stop the recording at this time. What we will do, somehow, I will somehow figure out how to get this recording onto YouTube, and I will post it to the link to it on Canvas so that everyone who has missed the conference will be able to play it at their leisure, and you guys who are here can replay any piece that you need. It will sit on YouTube. I've got some stuff on YouTube. It's been there forever. Okay, so let's stop the recording. Let's see.